Hello traders, Matt Chapman here, the creator of the trademark Trap Traders Concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date's Monday the 14th of August 2017. Hope you had a nice weekend, and the trap stroke trade we're going to take a look at today is a little bit different to what I normally discuss, but it's really hopefully going to be quite helpful to you to get your head around this whole trap concept and market manipulation. And basically the easiest way to think about it is the market seems as if it's going to do one thing very clearly, right? And you get convinced that it's doing a certain thing, i.e. traveling in a certain direction. Traders then pile into those positions because they are going in off those very standard technical indicators that everybody uses, those standard core disciplines that everyone's taking trades because of, right? Retracement trades, breakouts, etc. And what they don't see is what's coming in the future. They just believe that their analysis at the hard right edge is going to pay dividends to them, and it looks as if it's going to work. If I make a line down the center here and just pretend that everything off to the right hasn't actually occurred, right? So none of this has happened yet. Just focus in on the price action in here and look at what was happening, and then if you go off to the left as well, it was very negative. It looks as if it's following through, right? This is super negative at the hard right edge. People getting involved anywhere in this area are selling because they believe that the market is going to continue lower. You know, they didn't see this coming, right? They didn't see price up in here come Monday. On the Friday this turned, right? Can you imagine? So traders, whoever went in here, are all nailed when price is over here on the Monday. They got absolutely creamed. They've either been stopped out or they're holding horrible losses and being dragged off into deeper waters. And that's really the bottom line about how to consider and think about trades, right? In order to make money, you've got to take money, and you're not going to, but you've got to think through that process. You're not going to come in and put any of your money at risk unless you're convinced at the hard right edge that that's the correct thing to do. Otherwise, why on earth would you do it, right? No, well, you're not stupid, you wouldn't do it. The problem is you get convinced in. So the process is, like, imagine you've got this really strong market moving down and price pulls back into some prior support. Your idea is that it's going to become resistance. You believe that it's going to follow through. It starts to look as if it's going to, so it convinces you that your analysis is correct. The problem is, though, you're not focusing or paying any attention to the price action that's going to come. So you commit your money, you place your stop loss in very obvious positions, and you enter the market in here somewhere because it looks as if it was heading down. So you jump in fear that it's not going to, you're not going to make any money because you're not going to take some risk. You're fearful that you're going to miss out on the trade. You've done your analysis. Prior support becomes future resistance, and boom, you're in. And then next minute, price is up in here. And either, as I say, you've been stopped out or you're holding horrible losses. And that's what this is representing for anybody who went short in this area here. That's really what trap trading is all about. So on Friday, what I refer to that as, it's a very specific type of trap. There are several types of traps actually part of this trap, but I call this a screw trap. And people get dragged in short or long. It's very tempting at the hard right edge, but then price reverses in equal measure and then just absolutely aggressively moves beyond their entry and drags them, as I say, into deep water. So this, any type of pullback, anything in here to get long is fine. The longer term trend is to the upside in this pair as well. The euro is pretty much now the only sort of currency that is in a major trend at the moment. So from that perspective, this is a good choice. The stock market continues to rally. Again, bad news for the Swiss franc. So net, this looks like a pretty good trade and a continuation of that trend, trapping and sucking in traders who have gone short, believing that they're not in a trend and they're just trading those lower time frames and they're being dragged in the wrong way. Because remember, a trend just doesn't continue in straight lines. It must drag people in the wrong way. It must convince people that it's not continuing, and then it'll suck them in and then spank them on the other side. So, and then the trend continues. It's fuel for the fire, if you will. And if you'd like to come and join me to understand how we look at the markets in these ways, to understand why you've been taught the complete opposite of what you should have been taught, to make money consistently in the financial markets, then click on the link below and I'll see you on the inside.